In financial analysis tools, we have a tool called fund flow statement. It's a powerful tool because it is going to capture how much long-term funds have been mobilized by the business and how much of the funds have been used for a long-term purpose. So it is not a mere comparison of long-term sources and long-term uses. What it shows is whether there is any surplus or deficit because of this long-term funds. That is, if the long-term funds are going to be greater than the long-term uses, then there is going to be a surplus. And that is good because that is going to help the business to manage its working capital. It is going to contribute for the margin. But on the other side, if the long-term funds or the long-term sources are going to be less than the long-term uses, then there is a deficit. And now comes the important question: who funded the deficit? From where the deficit was funded? And that's where a critical analysis will start, and that's where many Pandora box will get opened. That's why fund flow statement is very important,